President Schreiner, members of the board, just want to take this opportunity to discuss a document that I've done probably I think it's been about 8 years that I've been doing this report. What it is, it's an annual financial review. It's looking back at last fiscal year 2017, 2018. And we do several reports throughout the year. One of them is a forecast, which I just did in October, and that one's kind of looking forward into the future, 5 years into the future. I also do a very large, we're wrapping that up right now, something called a comprehensive annual financial report. It's about 170 pages long. It's very technical in nature. It's done in a modified accrual accounting system. We do things like GASB 68 and 75, putting our pension liability on our books, putting in all the receivables and payables, and it's a very intense document. And what that document's used for is when we're issuing bonds, institutional investors like pension systems or insurance companies use that kind of document to kind of look at the strength of our school district. From that big CAFR that we have, also the credit rating agencies look at that document as well because it's technical in nature and they can see where our finances lay. But for the layman out there, for all of us that are out here in our school district, we'd like to have something a little bit easier to look at. And what I've done over the last several years is put together an annual financial review. This document is a mere 6 pages long. It gives us some good information about our school district and kind of where we are at the end of each fiscal year. So I'll go through a few highlights on the revenues and the expenditures, and I'll also bring up a document that I shared actually at the last forecast presentation I did, talking about where we rank for our expenditure per pupil and also for our amount we tax our citizens within our school district. So the first slide talks about revenues. From fiscal year 2017, 2 fiscal years ago, to this last fiscal year that ended June 30th, 2018, our revenues increased, our operational revenues increased about 5.4%, roughly $13.7 million of an additional increase in revenues. Some of the majority of those came from state funding formula, and also we had interest rates were much better now, so our investments are gaining steam. There for a while, we were about each basis point equals, 100 basis points equals 1%. So a few years back, we were lucky to get 40 basis points, so 0.4%. That's a very low interest rate. Now we're getting anywhere from 2%, as you'll see in the investment report that Lee will talk about here in a minute. We're getting 2% on our investments, and with a nice cash balance, we're getting some nice returns on that. So we had some increases there. So if you look at our state funding, we receive roughly 52%. You can see on the pie chart, roughly 52.4% of all of our overall revenues come from state formula. Real estate is roughly 36.2%. And when you add in to the state funding, if you look at that property tax allocation piece of the pie up there, that's another 3.8%. So really about 56% comes from the state of Ohio for our funding. It's been as high as 60% in the past, but with our increase in our local revenue from interest and some other items, that amount has come down just a little bit. Moving forward to general fund expenditures, some highlights on there. If you look at our operational expenditures from 2 fiscal years ago, fiscal 17 to last fiscal year 2018, that was an increase of roughly 5.1% over the previous year. Roughly an $11.9 million increase. So those are additional staff to staff the new buildings, additional gas prices that are going up. All these things that we've seen inflation start to creep up a little bit. So we've shown that on this pie chart there. Instruction has always been one of the things we spend most of our money on. You can see how I break that out there, and it shows that 73 cents on every dollar is spent directly in the classroom to our students. So the majority of our funds is going right into the classroom. If you add up transportation and plant maintenance, the plant maintenance is actually operating our buildings that we have. That's another 13 cents on every dollar for getting our students to our buildings and putting them in safe, warm, safe and dry buildings. So that's another important piece of the whole educational process for our students. Looking at those two pie charts I just talked about were the general fund only. Most of our accounting comes from our general fund, but there are different funds that we have to deal with. We have 6 other fund types that I'll just briefly discuss. We have special revenue funds, debt service funds, capital project funds, enterprise funds, and then we have agency and internal service funds. So those 6 fund types make up another portion of what we spend each fiscal year. Special revenue fund types make up 17.3% of the other funds that are we account for. Those are all our state and federal grants that we have out there, like Title I, IDEA, Head Start, those types of funds. So we have 17% of those are accounted for there. Debt service fund, that's 22.7% of all the other funds that we deal with. That's where we're accounting for our no new millage that we just passed in November. There won't be an increase of dollars coming in there because we promised our taxpayers that we wouldn't raise our taxes, and we won't. But all the principal and interest payments come out of there. So the money's come in for the taxes, and we pay off our principal and interest payments for the buildings that we've built. Capital projects funds. These last fiscal year, that amount it went down quite a bit to only 4.9% of our overall other funds. What we did is that's mostly our permanent improvement fund that was spent on these expenditures. Things like roofing, paving, school buses, textbook, technology in our classrooms. That's how we spent those funds. You'll see that capital project fund really ramp up over the next couple of years with the OFCC building project coming on board. At that point, you know, that capital projects fund will get very, very active. It's almost like putting a whole nother set of books on and a whole nother set of work on in our department. It really, you'll see when we start spending these funds, you'll see how this will really ramp up when we're bringing that on board. So that's kind of a foreshadowing of things to come in our capital projects fund. Our enterprise funds, this is mostly our food service fund, and I just want to give a commendation to our whole food service department, and also Lisa Hamrick for what they do in our food service operation. Our food service operation does not get any funds from the general fund. That, if you go across the state of Ohio and you talk to other school districts about their food service operations, many times the general fund has to subsidize the food service program. That doesn't happen in our school district. They have a nice cash balance. They manage their food service operation like a business, and they try to, you know, they mirror kind of what we're doing in our own general fund. We like to kind of push things out and make sure that we're spending wisely, and also making sure that we have a nice cash balance that we can weather storms as they come up. So that's a big piece that this school district has not had to deal with. We operate our food service in the black, and that's a very commendable position to be in. The last 2 funds that I want to talk about, I'll just kind of lump them together. They're called internal service and agency funds. These are like clearinghouse funds where we're self-insured. So we charge our general fund, we charge our special revenue funds premiums, and we put those premiums in a special fund that when our claims come in to be paid, the money's already set aside to do that. So these types of funds are, it's like, yeah, it is our money, but we're setting it aside so nobody else can touch it. So those are important to safeguard those things, that if we ever do have a bad year of claims or something's going on in our insurance program, that those funds are set aside and accounted for and ready to be spent on that. Also, our pension obligations run through some of these agency funds too. So same thing, we charge our general fund and our special revenue funds, and those funds come into these separate accounts, and then when the pension system, we have to pay them, the money comes right out of there. So that's a pretty elementary level of governmental accounting, but this is how we do things in the governmental world. And it's important that you know, as a board member, these other funds are out there. Generally speaking, we're always talking about the general fund, but there are some other funds out there that you need to be aware of. Last but not least, I just want to warn you that this is the same one that I just showed you at the 5-year forecast. There's 2 pieces of information that will be updating hopefully very, very soon. One of the pieces of information is what the Franklin County tax rates are. I don't have those right now. There's a couple counties out there. Franklin County has sent their information up to the state tax commissioner. He has Franklin County's information, but there's a few other counties out there that haven't sent the information in that are adjoining to us and to other schools in Franklin County. So once that information's up there, then Franklin County will show us what our rates will be for the Southwestern City School District and other school districts in the county. So not having those current, there's some things out there that I want to point out. If you look at where we are as far as how we rank in the county, remember, these are the old tax rates. The new tax rates will be coming out soon in your December bill. Those bills will be coming out soon. If you remember, in May of 2018, Gahanna-Jefferson passed a 5.5 mil levy. In November of 2018, Dublin passed a 5.9 mil levy. Grandview Heights passed a 1 mil operating, and I think it's going to end up to be about 2 mils increase to their bond millage rate, so around 3 mil increase for Grandview. Whitehall passed a 3.41 mil combined operating and bond issue, new dollars. Worthington passed a 2.9 mil incremental levy with 2 increments that will 2 mil increments each year until it goes up to a total of 8.9 mil. So those are some pretty large increases in taxes. So if you look at how those factor in, I just talked about on this bottom here, you see Gahanna is going to bump above us. Grandview will bump above us. So we're really getting a really good bang for our buck. And if you look at some of the differences in rates there, it's pretty significant. If you look at our tax rate on the far left column, that's all levies. That's PI, bond levies, and operating levies. We're currently at 42.62. There's about 13.6 mils difference between the top. I'm not going to name any names. You can read it yourself, but that's a significant difference. For every $100,000 of value, that's $35 more for each one of those mills. So, 13 times 35, you can do the math yourself. It gets to be pretty large numbers. So I think we provide our taxpayers with a really good bang for their buck. We're not back to them at any time soon. When I talked about the 5-year forecast, I said we're in the black through 2023. No need for an operating levy that we can see unless something really strange happens with the state. So we're in really, really good shape financially, and we're providing it at a very good cost to our taxpayers. The other one, this column has not changed yet either. The state of Ohio provides this information. It's called expenditure per pupil. So these are still the 2016-17 numbers that I talked about the last time. I'm still waiting on that information from the Department of Education. They're a little behind on that, and I don't know really the reason behind that, but they're a little bit behind. If you look at this one, though, it is important to note that we'll probably be in that same kind of range when the new number comes out. We're currently 14th out of 16 school districts in Franklin County as far as what we spend per pupil. And if you look at where we are at 14th, we were spending $10,502 per student in the 2016-17 school year. Grandview Heights at $16,013. So that's again a pretty significant, $5,500 is a pretty significant amount of difference between what some school districts are spending per pupil and what we are. Now, to give Grandview Heights credit, they're a small school district. It can be tough to run an efficient operation with such a small school district, but we do have some economies of scale here, being a large school district and being able to really leverage some of those areas that we can to keep driving our costs down. So those are all, I think, really positive things when you look at us, how we compare within the county and also within the state of Ohio. The per pupil expenditure in the state of Ohio for that same year was $11,605. So about $1,100 difference between just the average in the state of Ohio. So we still spend under that level too. So I think a lot of good information on here. It's a good quick read for any of our taxpayers out there. This will be posted on our website after tonight's meeting along with the presentation, and I will entertain any questions that you may have right now if you have them.
Questions?
Just a comment.
Just thank you for doing a phenomenal job, you and your team, and when it comes to the investment pieces and the bonds and that sort of thing, and the way you, I don't want to say juggle, that could be scary, but you do. Just your management of it, it allows, I think, all of us to sleep better at night, and we really appreciate all that you do.
Keeping it simple, too. Thank you
Yes.
very much. No other questions? Thank you, Mr. Garside.